Hello, my name's Paul Rockett and I'm the Managing Director of Landlord Centre, and welcome to the second of our buy-to-let mortgage video blogs. This month the question we're going to consider is, how do I get a buy-to-let mortgage on a bargain auction property? And as usual, we'll break this down into some further questions, the first of which is, what general preparation should I make? I must say, if you've never been to a property auction before, then I'd strongly recommend you do so, just to get a feel as to what's going to happen. Bearing in mind you've only got 14 to 28 days to complete on a purchase. Once you've successfully bidded for a property, you absolutely need to make sure you're ready. You also need to realise that you'll be paying a 10% deposit on the day, which is non-refundable, and signing a binding contract that will legally oblige you to complete within the timescales allotted. Anything you can do to make sure that process is as smooth as possible, therefore, needs to be done. Possibly, forgive me if you're a solicitor watching this, the legal side is the bit that can take the longest, and you can obtain a solicitor's pack from the auctioneer before you go, so you can prime your solicitor to get them ready if you're successful with your purchase. The other thing to bear in mind is when you're setting your budget, to make sure you take into consideration other things such as fees for the solicitors, for example. Make sure you add it all up before you go to the auction. Which brings us on to the second question. What financial arrangements should I make before I go? If your financial arrangements involve getting a mortgage, then you probably need to make sure that the property is mortgageable. That might be by way of having a valuation done or getting a survey around, just to make sure there's no nasty surprises. It may well be that you do know yourself that the property is mortgageable, in which case carry on. But the next stage is to make sure the lender is prepared to lend to you. So you need to get something called a decision in principle, or DIP, and that way you can get the lender to confirm upfront that they're prepared to lend to you as an individual. There's no requirement for a property to be involved at this stage. They'll just confirm how much they're prepared to lend to you. Once you've got this decision in principle, you need to make sure that you've asked for enough as well. So always overestimate what your borrowing requirements might be, because if you underestimate and need to ask for more, we need to start the process again with the decision in principle. Having got one of those, you need to choose a lender who's going to be quick, so we're probably talking about BM Solutions or TMW. And with BM Solutions, for example, don't forget that if you've already got 3 properties within the Lloyds banking group, then they won't be able to lend to you. That brings us on to our next question, which is, what happens if my bid is successful? As I mentioned earlier, if you're successful, then you'll need to pay a 10% non-refundable deposit and sign a contract which will guarantee that you can complete within the time frame. 14 to 28 days is not a long time. So therefore, when you submit your application to a lender, you need to make sure it's fully completed. You'll be amazed how many people don't fully complete their application form. And any information you can send alongside, such as proof of ID or utility bills, will help speed that process along. Once the lender receives the application, then they'll go to valuation. Regardless of whether you've done a valuation or not, they'll require their own just to verify its value. Once that's been received, then they'll be able to produce an offer letter which they can get to your solicitor as soon as possible, which will enable you to complete. There is another option many people talk about, which is the bridging loan. Bridging loans I won't cover here, but you need to realise that they're quite expensive. Quite often there's a 2% upfront fee and somewhere around about 1.5% interest per month. So it's an expensive option, particularly if you're looking to remortgage away and do a normal mortgage afterwards. That brings us on to the fourth question. Does the property need refurbishment? If you are considering bidding on a property that requires refurbishment, then you may think that the only options you've got are cash or perhaps a bridging loan. But in fact you can organise upfront a mortgage for refurbishment. Currently we've probably got maybe 1 or 2 lenders that can do that. If we look at the TMW product, for example, they will allow you to borrow 70% of its purchase price, and then after works they will allow you to borrow 70% of its new uplifted value, subject to a maximum £25,000 more than you paid for it. There are some drawbacks with these products. They're quite high fees and they tend to be fairly short terms currently. They may change in the future, but it is a cheaper option than going for the bridging option. Which brings me to the last question, how quickly can I get a remortgage? If you have decided to go down the cash or the bridging loan route to purchase a property, then you'll need to remortgage at some time. There's a popular misconception that you can't remortgage within 6 months, and generally speaking that's true. However, there are 3 lenders who allow you to do that. They are Paragon, Northern Rock and Mortgage Trust. They're quite comfortable remortgaging against the original purchase price subject to controls and checks. However, if you've really bought a bargain property, then they will look at an open market value. They tend to be more inclined to do so if you've done some work to the property and can prove there's some extra value being put in. So Paragon and Mortgage Trust are amenable to an open market valuation. With regard to Northern Rock, they're far more interested in either the purchase price or the uplift in value you've put in the property in the meantime, and they'll need to see receipts to show work's done. In conclusion, there are 3 things that we've learned. You need to prepare, prepare and prepare. You need to make sure you understand what the process is, so go to a property auction before you're bidding in anger. You need to understand what the costs are and all the fees involved. You need to make sure your solicitor is well prepared, and you also need to make sure that the lender is prepared to lend to you. If there are any queries, you need to work fast because time is ticking. And hopefully after all of that, you've got yourself a bargain, and congratulations. Don't forget that you can check out all of these products on www.LandlordCentre.co.uk. I hope you found that useful, and I look forward to seeing you next month.